Sup, welcome to Tobes Trades. Haven't done a video in a while, but I guess this is as good of a situation as any to make a video. As you see, bam! The Qs are finally going down. Why? Look at the 10-year treasury yield. Right? This is the 10-year treasury yield. And look at 1.5% here. It says 15, but it pretty much means 1.5% interest rate. For the 10-year, it peaked at 15, 1.5 a while ago, a few days ago. And today, almost hit 15 again. Market open. And that's what's triggering the sell-off again today in the Qs. Tech especially. Right now, it seems to find a little bit of consolidation area, but not sure yet. And why? Because I haven't closed my call positions on the SQQQ yet. The SQQQ is the inverse of the QQQ. So when you want to short tech, you buy calls here. And that's exactly what I did in my YOLO account. Pull it up here. I entered a very, very small position. I think I put like 2K into it because look at this candle, by the way, yesterday. Look at this bearish engulfing candle piercing support. The next level is 303 or even 291. So right now we're finding a little bit intraday bounce. I might want to close down my SQQ call position, but I'm just showing you guys. Always hedge. Always hedge. My position, I'm already up like 1K on the position, and you can see I bought the calls just this morning around the top. Let's see where I bought them. I bought them 6 minutes ago, 9 minutes ago. So like 10 minutes ago. And if you look at the chart, that's exactly where we topped off at, right? So it tried to break the 311 resistance, and it couldn't, right? It stayed there for quite a while, and then I was like, if it's not going to break now, it's going to break down. And guess what? Broke down. And given the daily candles, it's so bearish. Look at it. It's very, very bearish. So what is the overall concern in the market today? The overall concern in the market are the bonds, right? We want to look at the bonds. The bond yield is so high. And why is bond yield high bad for the market, right? So why is it bad for the market? When bond yields are 1.5% or even 2%, although bonds are a much safer investment, right? It's a very, very, very low risk. And when bonds are giving you 2%, less people are going to be going into the market, the equities market, right? Because the Fed, Papa Powell, kept interest rate low throughout the pandemic, right? So more people went to the equities market. That's why you hear the headlines about, billionaires made $20 billion today. It's really just equity, right? So when bond yields go up too much, or apparently 1.5% is the Goldilocks zone. If it goes above 1.5%, there's a massive sell-off in the equities market. That's exactly what happened. And also look at the financials, XLF. Right, the financials are down today, right? Financials trade directly with bonds, right? So when bond yields go up, financials also go up, right? And that's exactly what financials did. However, be careful. The back of the financials might get snapped, right? If the financials go, the rest of the market goes, right? XQQ. Okay, I might want to exit out of my call positions. Give me a sec. I want to sell some right now. Alright, sold. Wait, let me show you. Alright, I sold 6 seconds ago. Perfect. We are at a near term. I made what? How much? I made like $1,000 on the calls in 5 minutes, 10 minutes. If you look at the chart, we are at like a possible inflection point. Let's look at the Qs for a better picture, right? Oh, his Qs are going down even more. Oof, maybe I shouldn't have sold, but whatever, right? I took some profits. We are forming a kind of a base here at 307, but I don't expect this base to hold at all. I'm going to re-enter, but I do expect a possibility of balance in the short term. Well, in the next 10 minutes, right? And Papa Powell, he does speak at 12:05 today, right? He's at a conference, the Fed's talking about interest rates, right? So as you see, I got 10-year again, right? So the Treasury, the Fed, in the past year, it has thrown all its weapons at the rates to keep the rates down. And yet, the rates are once again back at 1.5%. So Papa Powell today is going to talk about what other tools, and you're going to be hearing this word a lot, YCC, yield curve control. It's a very old school term. Those of you who are new to the market probably don't know about it, but it was a pretty big deal 8 years ago, 7 years ago. But so they're basically trying to control the yield curve once again, right? And if they do put in new measures, we could see a bounce in the overall market. However, if we don't, there could be a huge correction, right? And tech is leading the way. If you look at the indices, right? Always the S&Ps are kind of flat, the Dow's actually up, but the Qs are down almost 1%. So the Qs are indeed leading the market in terms of collapsing. What is up today though? Boeing, right? The airlines are up. I sold Boeing pre-market. I missed out on this like little run up. It's like 1%, but that's fine. I don't really mind. But okay, the Boeing is not really affected because it has, not out of the world evaluation. Unlike some other things, for example, Tesla. Tesla is insanely overvalued, and in a correction phase like this, it could drop down foreseeably to 464. All right, just letting you guys know. So how do you want to play this? You always want to hedge. You want to buy short term. Oof, what's that? 0.25%. Oh my! I might want to re-enter into my calls actually. Because the nearest target is 303. I'm going to enter a small position right now. All right, I'm in my small position. We could see a bounce here, but I think the near-term target is 304 for intraday before it bounced. It tried to, as you saw it tried to bounce a little bit here, but it couldn't find any support. Look at the volume. The volume didn't change at all. There's no buyers coming in. There is no bid under the stock, right? So we could see possible further sell-off until Papa Powell speaks at 12:05. For now, just just chill. You might want to get out of the market for a bit, especially growth stocks, guys, like Etsy, right? These growth stocks. Look, the swings in Etsy lately has been tremendous, right? So it first dropped down 20% to 200, and then it went up 20% to 250, right? And then it went down 20% again, right? These growth stocks are just capitulating. It's a capitulation point. Look for further corrections, right? If you don't want to buy puts in the overall market, buy puts in the high growth tech stocks like Etsy, like Chewy. They could drop like 10, 20 more % in the future if the Fed does not offer more quantitative easing ammunition. Let's see. Yeah, so the stocks up today are barely anything, mostly just unrelated sectors like financials are actually up. Holy moly, right? If there's two possible scenarios, by the way. If the financials go up, the markets collapse. The financial okay. If the yields go up, financials collapse. If the yields go down, financials collapse. When financials collapse, the overall market collapses. The only way we're out of this situation is to keep the rates flat for a while, right? Keeping the rates flat for a while could do well for the overall market, but look at the risk reward, guys. If the yields go up, market collapses. If the yields go down quickly, market collapses. It's because going down quickly will collapse the financials. When the yields go up, they'll collapse the overall market, right? You see what I mean? So the yields go gradually down a little bit, they go sideways. In that case, it'll be good for the market. But for now, are we founding on a bounce? Let's see. Not really. You see this attempted green candles, this bounces, but they just keep failing. If you look at the 5 minute, it's just bearish. But as always, guys, when there's chaos, there's money to be made. Chaos is the ladder, right? So just short everything, buy everything, short everything now, and then buy the dips later. It's basically free money. The timing is what's the most important, and with that, we want to look at the key macro elements of the economy. Right? I'm a day trader. This is not my forte, but I am an econ major, so I do know a little about the macro economy. And when the 10-year, okay, by the way, look at the growth rate of the 10-year, right? Year to date, where's January 2021? Year to date, the yields themselves are up 60%. All right, this is not a stock like GameStop or something that goes up 60%. This is a 10-year treasury yield going up 60%. This is unprecedented. Whoever is buying currently in this market is retarded, I'm pretty sure. Right? When the 10-year United States treasury yield goes up 60% from year to date, right? When it skyrockets up, there's something going on. Right? There's a lot of volatility in the market right now. You don't want to go long, right? You don't want to be selling premium either, or you don't want to be selling like covered calls or cash or carry puts. Right? Selling premium is not the way to go. Here we are long Vega, right? We are not long theta at all. We're not short theta either, but we are very, very long Vega. Vega's volatility, and to Vega we can play some SQQQ or even the VIX. Right? The VIX is down actually a little bit today, but you know, when VIX is even down and the market's down, that's weird, right? So then you want to look back at September, the gamma squeeze, September 1st, here, right? So around here is when the VIX went up and the market went up, right? So usually these two should diverge. Okay, we are finding a little bit different dip in the market right now, but usually these two should converge. It should diverge. But when these divergent factors converge, there's massive built-up tension in the market. The market's like a rubber band, right? If it goes up quickly, it goes down quickly as well. And look at the treasury yield, right? What's next for treasury yield? Going by the same logic, what do you think? So be very careful in the market, guys. I'm not saying there's no money to be made. There's definitely a lot more money to be made than usual, even. Chaos is the ladder, of course. But I'm just letting you know. Be very, very careful, all right? So that's it for this video. Remember to like, comment, subscribe, and peace out.